Welcome to Trading Lounge and the European indices, and starting with the German mid-cap here because it's got the clearest count, and that way I mean wave 3 here with an A wave here, definitely a corrective pattern this way. You could relabel that a different way. And then we've got this impulse wave to the downside here. So we're in this wave 4 here. Wave 4s can get complicated. Anybody who knows Elliott knows that. So it's possible that this wave 4 here could turn into, a bit of a triangle pattern here. It could give us, look, it could do quite a few things within here. Okay, so I'm not quite sure how it's going to play out. We have reached our 38.2% retracement level in this case, but look, it could test higher here as well. It's not that we really trade this. I'm just using this as an overall picture for a lot of the other European markets. So look, today I don't have any clear pathways for this particular wave 4 that we're looking at in most rallies that we've seen. But we can have a look at strategy, okay, and trading strategy. So with that in mind, let's go to the DAX first. So with the DAX first, we've got this move up here as an A and a B and a C wave here for wave 4. It could move higher to the wave 4 of 1 lesser degree, which would bring it up higher here. In that case, we could rearrange this in terms of a B wave here, A wave here, and a C wave over here for this wave 4. That's possible as well. I'll just leave this for the time being here. The important thing here though is strategy. Okay, so last time we spoke, what I was looking for was the first low below the level here, so the trading level. So 11,500 is a medium level, and we were looking for, well, that low to come into place here. So if this low is breached now, then we can short from this point. Okay, so that's quite clear. But at the same time too, this is actually, the reality of this is that we are in an uptrend here. We are seeing a corrective pattern across here as support so far on the medium level here, 11,500. So normally using the trading levels, we would have this reference point high here to go long on, the same as we've got this one here. And then as time went on, we would, whoopsie-daisy, we would bring this down to this point here. And then we could also bring it lower in here as well. So bringing it lower in here would bring it into the point of, well, this little box in here is the 50-60% retracement level. So if the market found that box there, the top of that box, as support, well, then we would need to look at the long side for this. Okay, we could go long from that point. Basically, we need to be on the right side at the right time of the market, and that's simply that right side to me at the right time means that we gravitate to the closest largest number where the market's having the correction, in this case here. We know that the correction's maturing now, don't we? This is what we call the arrival, and this is really the a matured corrective pattern at this at this level here. So all we need to do really is sell lows or buy new highs. But in this case, in buying new highs, we want to come a little bit closer to the market. So let's just go into that a little bit. So firstly, just on the hourly chart here, we've got this low here. So we've got that green line in here. That's what we were looking for last time, okay? So that's in play, and it does appear that we've got 5 waves down here. So we could call the move down through here. Well, I'll get to that in a moment. So we can go there. We could also go to a smaller degree of that first low and retest here. So if we get another one in here, then we can use that one here to go low on, but you must wait for the reference point first. Now, it doesn't look like it, but from the top here to this low here, that's the 50-60% retracement level. So realistically, if that box became the support there, then we could go long from that point. So if we bring that down to here to get an idea of where the price is, and also too, if this market went up here, we would need, if I can just draw over here, it would move up into this space here where it would mirror that because of the sellers are there, and it would have its normal little pattern here, the ABC. So we'd actually get another little high in here. So that little high here is the one that we're actually looking for. So we want the first high above the level of the 61.8%. And if the market moves up from there, well, then we're long from that point. And there's good reason to go long here too, because this move here coming down through here as an A wave, a B wave, not making a new high here, and then 5 waves for the C wave. So it can be wave 4 here as well. So I know that we've counted this differently. We could look at this as wave 1 and 2 here, then 1 and 2 and 3 and 4 and 5 here for the third wave. And then I had this as the fourth wave before, and we were looking for a new high. We just didn't get it. But this can be an A and a B and a C for the fourth wave here, and we could be making one more new high in here, at least here. So moving up higher here. So yeah, if you don't get this here, then what you can do is gravitate over to this number here, the 11,600, and draw a line across there. And if you get support on that, then go long from that point. Otherwise, we'll just be looking to go short. So really, we want to be on the right side of this 11,500 here as support or resistance, and we want a high to go long on, or we want a low to go short on. That would be the tactic for that, and that pretty much moves across to the other markets as well. So when we have a look at the FTSE as well, it's done the same pattern across here. We're going to use 7,100 here for that. That's the balance line for this particular correction. So it also hasn't made a new high here. We can also count 5 waves down here. So we've got a reference point low here, right, on that 50-60% retracement level here. So from moving up here, the 50-60% retracement levels here. So we can go long on that. I mean, sorry, we can go short from in that space here. And the same thing with the top here. That top is the 61.8%, so if that becomes the support, then just simply go long from that point. And then we would need to look at this as an A wave, a B wave, and a C wave. Otherwise, we need to consider the top being in play here, and we're going to be drifting to the low side. So the other interesting point here that I want to make, I mean, markets are just trends and corrections of different degrees. And the problem with corrections, I mean, I love corrections because that's where the next trend is going to be engineered from. But when new traders tend to look at corrections, they go, oh, well, that's just going sideways. That doesn't interest me. I want the trend. So they'll be looking for a trend, and they're always getting in too late in the trend because they can't figure out if it's a trend or not. You know, is it establishing or what? So don't fall asleep during corrections, because it's going to break out one way or another. We've done all the right things here. So we've got this high here, down to this high, and we've got this low here, and we've got this low here. I'm not saying there's a triangle building in here. There could be, I doubt it, but it could be. But the point is we've got these reference points here. So we're narrowing the situation down and down and down. Because after all, we want to make money. We want to take money from the markets, and analysis is one thing and trading is something else. So yeah, we need to take setups when we see them, and this is some type of corrective pattern here that could take us long or it could take us short from there. So we need to go with that. And this is the same for let's go to Italy next. Here we go. Italy's a bit of a tricky one. So I'm looking this at wave 4 here as well. There's no way I'm going to turn bullish on this unless we've got 20,000 as support here. I know that it's normal for a market to, you know, come down, bounce off a large number like this here, and then eventually go through it, then come back up and retest it, and then move lower, and then that's our reference point low here. But in this case, we should be able to get closer up into there if it's going to move down lower. I mean, by all means, it could go up through there, and if it does, fine, but we want that as support to prove. The market's got to prove to us its direction and its strength and so on. So this is how a market migrates from support to resistance, or resistance to support. It's that simple, and that's what we're seeing in this picture here. So this little move up through here in all of these markets, I can count it as corrective or I can count it as impulsive. So it's not a huge help within all of this, I must say. I can count this up as an A and a B and a C, but I wouldn't pay too much attention to this count. There's parts that I understand. I can see 5 waves here. I can see 5 waves in here. I'm not sure about this mess in here. In fact, the logical thing to do would be to put that here, but I don't know. I mean, that could be 5 waves in there. It's just so messy in here. I can't get my head around it. This move down here looks like 5 waves down here, but it's not. If I can just bring across the cash market on a 1-minute chart over the last 2 days here, I can see that we've got down for 1, back for 2, and then 5, 5, 1, 2, 3, 4, 5 down. So we're in the 3rd wave. So we've either got an A and a B and a C wave here, or we're going to have wave 4 here, as in 1, 2, 3, 4, and then 5 down here. And if we get 5 waves down here, then we're in business, okay? So then we would know. So we know that this is a bit tricky to work out, but we know that this 4th wave going on here, if we get 5 waves down here, this 5th wave down, then we can look for an A and a B and a C back up here, and then we'll go down from that point. But we don't have that yet. This market can just go straight up from here because it's in 3 waves down here. We're seeing that on the cash market. So if we get 5 waves down here on this, then let me just get this into play here. We can just simply, it'll be a 3-wave bounce. We just draw a line across it. And when I talked about a market migrating from support to resistance or resistance support, it's going to happen on a trend line too through here. Okay, so same. So let's just allow this to play out. Don't pay any attention to this count here because it's something not right about it, and yeah, I'm not that convinced about it just yet. So I mean, normally I'd see this. I mean, it's stuck at the 61.8% retracement level here. I appreciate that, and it can fail from here. So we'll definitely be on the case. If not through here, we'll get it under the 19 here. But markets like to reach out to large numbers, and it would like to retest this. So it's quite possible for it to push up higher here and give that a good knock-in before it starts to fade at that particular point. And we'll look at the French market as well. So the CAC. So give me a second to get that here. So I mean, with this market here, we've just made a new high here on this one, but we haven't done it on the DAX. So in this case, I could count this is a bit dodgy in here, as a wave 1 and 2 in here, and a 1 and 2. It may not be the case here, but whichever way I look at it, it can still be an impulse wave to the upside. So yeah, I don't really know what to say about this particular market as well. If it pushes through here, then it's likely wanting to come down to closer to the 5,000 mark. So you could take it at that point there. Let's just see. It's going to move with the other markets. Let me just. It's even if I move this, it's still. Yeah, just not clear. In fact, a lot of these here, this first little wave up in a lot of cases can be counted as corrective, making all of this corrective as well. I've seen it on the DAX, I've seen it on the FTSE, so I'm just a little bit unsure about this here so far. But once again, too, we in terms of being bearish here, then we really want to see it under the 5,000 area here. All right, just short and sweet, and yeah, tactics on the DAX. Cheers.